Good morning, traders. Steve Gans here, and welcome to the weekend before Christmas 2024. And I'm going to go through some market analysis here, taking a look at what our markets did this last week. And it was a pretty significant move, and it may be foretelling a little bit of the future. So let's just take a look at this and kind of determine what it might be telling us. So we can see that I've had over many months here, I've had lines, support resistance lines drawn on this chart. This top one was a pretty tight support line. I expected that to probably break, and it did on the Fed news that we had earlier this week. That really put a kink in our prior market activity. But I want you to note that it came down to this other support level. It held there for 2 days. On the third day, it dipped below that level. Then it did rally back, but then it also sold back off going into the close on Friday. Now, the fact that it broke this resistance level is not ideal. It's not a death knell. It doesn't necessarily mean we're going lower, but I wanted to see that level kind of hold. Worst case scenario, if we do dip down again, I would think we would come down to this level and the bottom of that channel. There's a little bit of a convergence there at that point that should hold. If that does not hold, then yeah, we're looking at a trend reversal in my mind, and that trend reversal could start moving us down. The key here is we've continued making what I will call higher highs and higher lows. We've been doing that now for a couple months until here. Here we made a lower low. We have not yet made a lower high. So if we rally up here, and maybe we only rally into this area and then we reverse and come back and make a lower low, at that point, we will have a trend change that's potentially starting. We'll also have at that point what's called a head and shoulders top, where you have a shoulder, a higher head, and then if this comes back and just rallies into here or so and then sells off, that's going to be another shoulder. Head and shoulders also tend to be reversal patterns. How this thing plays out over the next, I'm going to say 2 weeks, is going to be pretty important. And the reason I say 2 weeks is this coming week with Christmas week, Christmas being right in the middle of the week, a lot of your professional traders are not really going to be on the scene, so to speak. Most of them will probably be off the next couple of weeks. So most of the movement we're going to get in the next couple of weeks, in fact, I may even stretch this to 3 weeks, most of the movement we're going to get in the next 2 weeks is going to be largely retail traders. Retail traders don't necessarily drive the market. We're probably going to see the volume here dry up because the pros aren't going to be in there. Now, there's a couple encouraging things that lead me to believe that we might bounce up here and make a higher high. That would be a huge plus if that were to happen. The couple things that tell me that may be possible is look at this volume bar on Friday. So when we had that little bit of an up move, that volume bar was massive. Lots of buyers came into the market as we started to rally back. So that is a good sign. The other sign that we need to look at here, let's just look at a couple other symbols. Let's look at VIX, the volatility reading here. And volatility, while it spiked on Friday, it did drop back rather significantly. So that is also a little bit of a plus for us at this point, the fact that volatility dropped off the way it did. We can also now come in and let's take a look at let's take a look at RUT and see what that's looking, the other main index that I follow closely. So here with RUT, we are still staying essentially within this channel. Again, a slight move outside the channel isn't really a huge thing. We are technically still making higher highs, and I would say higher lows. Again, that's a little bit of a question here, but this is still higher. So I would say we are making higher highs, higher lows. So we are definitely still in what I would define as an uptrend here and looking to probably, again, have a rebound that's going to come up maybe back into this higher area. Again, if this starts failing, if this starts falling out of this channel, then we got to really watch the SPX closely too and see if it starts falling out of its channel. If we look at the volatility for the rut, which is the RVX, we can see that the volatility in the rut also spiked up quite a bit here, but then it came back down. Didn't come back down as far as I'd like to see. I'd love to see it get back down into that area there. But it did come back down quite a bit as well. So again, those are going to be a couple things that we'll need to keep a close eye on coming up here in the next week or two, is to see how those couple things play out. Again, how it plays out in the 2 weeks when it's going to be mainly retail traders, not professional traders in the market. I don't place as much credence in that. If we get into the first week of January, and we start to see breaks falling out of the bottoms of these channels or making lower lows, then all of a sudden, I think we need to change our mindsets in our market and look at, are we looking at some sort of a change in the overall positioning, if you will, of the market? Are we starting possibly to build a downtrend channel for a period of time? As we know, those downtrends tend to get a little more volatile than the uptrends. There's a saying that the markets take the stairs up and the escalator or the elevator down, the elevator down. So they tend to, on those down moves, they tend to happen much faster. Volatility tends to spike more. And that spike in volatility can be really good for butterfly trading. We just need to keep powder dry and see what happens there. In those volatility spikes, that's maybe times to start considering looking at some butterfly trades. That is it on market analysis for this week.